Hello, everyone, and a very warm welcome to today's major markets update for Friday, February the 9th, 2024. 3 out of 4, that's what we mostly get correct, or 3 out of 4 is what the market usually follows. Wave 3 tops in 138 to 161.8%. Wave 4 goes to around 100%, and then wave 5 extends or truncates. 9 out of 10 times it extends. And that's what we're currently seeing. So we get wave 2 correct, wave 3 correct, wave 4 correct, and then the market throws the, I might call it as well, proverbial curveball. Okay, that's often what we see. It would be really nice if the market always exactly bottomed, topped, bottomed, topped, 2, 3, 4, and 5 waves where it should be. But it doesn't. This is why we always say all we can do is anticipate where we expect the wave 2 typically to bottom, 50 to 76.4% retrace, where we then expect wave 3 to top, typically 138.2 to 161.8% extension, where we expect wave 4 to bottom anywhere between the 76.4 and 123.6% extension of wave 1, measured from wave 2, and then wave 5 to the 176.4 to 200% extension. But the market doesn't have to listen to that. All right, the market doesn't owe us anything. And currently, we are facing a fifth wave extension. So let's go over the data. And remember, we've never said to short this market at all. Just raise stops, take appropriate measures, and divergences are only divergences till they're not. We have never broken below any of those raised warning levels that we continue to raise. And as long as we do not see any break below those, especially the final fourth one, the red one, higher it is because the market deserves the right to subdivide higher. All right, a micro 4 can subdivide in 5 nano waves. The fifth wave of the nano wave can subdivide into 5 pico waves. The fifth wave of that fifth wave, the pico 5, can subdivide into femto waves, etc. It can completely subdivide till you are nauseous, but that's what we're currently potentially seeing. So, did we reach 5,026 on the S&P 500? Yes, we did, awfully close. That said, always remember that we need to have stop losses in place as stops and raise those, okay? And remember, if you are new to the Elliott Wave, please read it on my website. Go to the menu, click on Education, Elliott Wave, read up, because that is the final arbiter in assessing the markets. Anything else is moot, really. It's because it's price-based. The price is all that matters. Click on our premium membership login, watch the how-to videos, and where you can see special corrections can be difficult to track and trade. You want to learn trading yourself, I can make you trading models. If not, follow my major market trading alerts. We're up, doing really, really well. Once again, we've been long pretty much since the beginning of this year, and it's been working out well. You've definitely earned all your money back if you followed that system. It's super easy. If you're new to trading, please sign up for it, all right? It costs a little bit, but it won't hurt you. You learn to trade, you learn to enter, you learn to put a stop loss in place, you learn to take a partial profit, you learn to raise the stops exactly how you have to trade. Anything else you still need to do, please contact me and we'll set up a consultation. And please remember, all we can do is anticipate, monitor, adjust. We're 70% reliable, 3 out of 4, because the market reserves the right to do something else once we get to the fifth one. And that's unfortunately what we're seeing right now, most likely. Is that unfortunate? I don't think it's unfortunate. I prefer bull markets over bear markets. Here is the NASDAQ. And I think we have a subdividing gray wave 5 underway. The pullback we had earlier this week, I believe on Monday, was the wave 2. We're now wave 3, 4, and 5. Okay, that's pretty much what we're seeing. We had a picture perfect, nice wave 3, topping here at 161.8. Wave 4 normally tends to bottom at the 100% extension. Thanks to the Federal Reserve, we went exactly to the 76.4. Now, in a standard Fibonacci-based impulse pattern, 5 is often equal to the length of wave 1. That would have reached 176.4%, but we can always extend. And yesterday, still we're nicely in this ideal target zone for the wave 5. Let me make it a little bit thicker so you can see here, right? We're topped here exactly for the wave 3. We bottomed here exactly for the wave 4 in the ideal wave 4 target zone. And then we topped here yesterday in the ideal wave 5 target zone. But today we went above it. This means we're experiencing a wave extension. So I view then this rally as wave 1 of 5. The bottom on Monday was wave 2 of 5. And this was wave 1, 2. And we're now in 3, 4, 3, 4, 5. So expect wave 3 to go to about 16,625-ish. Wave 4 back to about 15,900, somewhere around there. And then the final wave 5 to there. So it continues to subdivide. I have a very big turn date, February 29th. That's really what it is. Do we have a February 29th? Yes, we do. See that? So that's the pi phi turn date. And you can also see here, once again, that we have exceeded the ideal Fibonacci-based extensions. Once again, green wave 3 topped exactly where it had to in the ideal wave 3 target zone. Wave 4 went slightly below the ideal wave 4. Retrace, but as you can see, if we do it on Fibonacci's and not retraces, this is the ideal wave 4, bottomed exactly where it had to. And now we're extending. Wave 5, this wave 5, ideally tops here, but it's not. It's extending for whatever reason, okay? It's simply the market likes some new data. So first warning, of course, today's low. Second warning, below the wave 1 high, which is last Friday's high. Third warning, below Monday's, and then the fifth warning, right, or the fourth warning below, of course, the Federal Reserve low. That's it. Very simple. Why? Because then if we go below the Federal Reserve low, all bets are off. Then we have completed this impulse. For now, this still is impulsing higher. And unless we break below Friday's low, which is today's low, I don't see a reason to turn bearish at all. And I think we can reach those upside targets. NASDAQ 100. Let's zoom in here for a moment. Same here. Again, wave 3 here topped exactly where it had to, right? Wave 4 here bottomed exactly where it had to. And then wave 5 should ideally have topped here. It doesn't owe us anything, decides to subdivide. Can always happen. So I think we're going to go to about 18,300 plus for 3. We're going to drop back to about today's levels, probably around 18,000, and then a wave 5. Okay. Again, the green wave 5 should have topped here. We're extending. Just like the gray wave 5 should have topped here, we are extending. The market decided to extend. That's just the way it is and the way it can happen. Now, what can you do about it? Nothing. That's just the way it is. So, unless we break below today's low, then break below pretty much Monday's, Tuesday's high, I think we can move higher in this pattern. Those are now our raised stops. As you can see here, really a extended wave 5 green, because nowhere 5 is 1 reaches this green arrow. And that's not what we're seeing. So this is extending like crazy. This also means that once this third wave tops here, black 3, I expect the retrace only back now to about 16,000, right? We raised the retrace level. So here is then the hourly chart. And so far, so good. Again, you can see a 5-1 relationship should have topped here in the ideal wave 5 target. It's ideal, doesn't mean have to. And we're extending. Okay, so we're extending. So most likely we have this wave count. Okay, this is kind of what I'm looking at there, something like that. So we should be in this red 3, red 4, and then we get teal 3, teal 4, blue 3, blue 4, red 3, or orange 3, orange 4, and orange 5. That is my expectation, as long as we hold, of course, above key levels. Okay, that is, of course, the usual. So the first key level is, of course, here. The second key level is, of course, there. The third key level should be, of course, there. And then I think if we go below this wave 2 here, we're not looking too good. Semiconductors is moving exactly as anticipated, right? Yesterday, we said it's now most likely in this gray wave 3, and there we have it. Could have topped already, but I'd like to see it a little bit higher for an extension, and then a 4, and then a 5. Okay, to about 4,723 for 5. Zooming in, as you can see, a little bit higher, 4,600 would be perfect. As you can see here, 4,600. And then we get a drop and then a rally. Okay, the rally targets ideally somewhere around 4,700 plus minus 25. Okay, 4,700 plus minus 25. There we go, getting awfully close. 4 or 5. This wave count could also apply to the other indexes, by the way. So far, so good. I like it. S&P 500. This is the wave count we're tracking, and we once again exceeded the Fibonacci extension at 5,020. So we're dealing with a extended wave. So the best way to interpret this is the 1-2-1-2 setup, similar to the NASDAQ 100. And as long as we hold above these critical levels, we can allow for this path to fill in. This can target all the way to 51.75, by the way. It can, okay? It really can. We have to see, of course, breakdowns below critical levels, which at first is, of course, today's low, which is Wednesday's high, which is or Thursday's high. And if we don't, we're going to move simply higher. 5,026 was the ideal upside target, and we kind of surpassed it already. However, there is next Fibonacci resistance as 5,048 as well. Okay, 5,048, let's see here, would match here with this 100% extension. See that? Again, we can easily march higher. Also on the weekly time frame, we don't have to adhere to the 200%. We can also go to the 223%. Okay, but we anticipate first, and then we monitor to see if it's really going to listen to it, yes or no. We don't know beforehand if it's going to listen to it or not. So then you can go, okay, where is the 523% extension? Where would we target that one? Okay, let's have a look. We're going to add this there. There we go. 5,052 could also be 5,048. And then we're going to add the 23.6% extension to it. Okay, so we're going to set the reference bar here. That's 23.6. And let's see. How high would that target? That could target as high as 52.99. Yes, we can target 52.99. That's how high we can go. Easy peasy lemon squeezy, okay? Just because we move our upside target doesn't mean we're moving the goalpost, okay? We're simply anticipating, monitoring, and adjusting. We cannot predict the future. We simply go by what are standard Fibonacci-based targets, and if the market decides to not listen to it, then we're going to look higher. Break above those, it's fine. We've never said you have to go short and throw everything in the kitchen sink at it. Also, on a weekly time frame, I think this would look better if we would see, for example, better subdivision of this relentless rally since October. We've only had one down. So if we count a down week as corrective, then this is the only correction we've seen so far. Now, if we would even allow for an insane Fibonacci extension like this, right? It would be crazy. We're going to go to almost 6,000. Is it possible? It is possible. But I'd like to see a down week, right? So we're going to raise, of course, our targets. That's all we're doing. We're going to raise our targets. I want to see a down week followed by a few more up weeks to complete this impulse. And yes, can we go all the way to that high? Sure we can. Doesn't have to be. But I'd like to see, my point here is I'd like to see a down week to confirm a fourth wave. Okay? That's pretty much what I'm looking for. And then we'll simply see if we can get that high or not. Once we start to extend, we don't know if it's going to ultimately target the 223.6, the 238.2, the 2.5, 261, 300%. We don't know. However, I do want to point out, if I go back here to the hourly chart, that the 200% here in orange for orange wave 5 at 51.78 matches the 400% at 51.75. You can see how extended this wave then becomes. All right. Normally, wave 5 is the 200%, 49.47. That's what we're targeting. That's what we got. We got a reversal, but never ever did we break below these critical levels that were to be broken to tell us the top was it. So that might be a fantastic FIB confluence, 51.75. Okay. So 51.75 on a Fibonacci basis using these weekly candles. Not that one. I never understand why stock charts picks that one. It's a FIB. The fan is the most useless indicator that there is. I don't think anybody uses it. If you do, please let me know. I'd be curious to know. Okay. So as you can see, it could go much, much higher. But for now, as long as we stay above these warning levels on a daily time frame, I'm good, and we can allow for higher prices. IWM is right here at the cusp of 200, well, 199, 200. Today's candle is good. Okay, we broke above the bearish warning levels, and if we break above the 1A high, I think we can see the 3, 4, and 5 as you show. Okay, this 5 should be a little bit higher. We don't know yet if we're going to get 5. We just don't know it yet. Again, the wave 2 here bottomed exactly in the wave 2 target zone. Right there. And then, of course, wave 5 should go to about there. We don't know if we're going to get 5 waves, but it should do it. Right? It should do the trick. There. I like it. That looks much better. Symmetry target, red arrow, targets exactly in the 208, 210 region. That's really all there is to it with the IWM. This was our preferred wave count, and it still looks pretty decent. Now, let's look at some market breadth indicators. Again, these are only divergences, still they're not. Still there. The bullish percent index is still diverging, but as you know, it can take a while. Okay. And divergence can also get erased, as we saw here. All through the day, it still looked like we had divergence, but the small caps are finally catching up. So we still have slight divergence, but not by much. Divergence is only divergence, it's not. If we get a higher high, it's all gone. How we're doing on new lows? Reasonably benign. It is definitely slightly increasing over time, as you can see, for the NYSE. But otherwise, not much to see here. How we're doing on the buy signal for the McClellan oscillator. I don't have data for today. If it's positive, we have a buy signal. How we're doing on the McClellan oscillator for S&P 500. Still negative, interestingly. But once again, we've had negative readings here in May and June, for example, and the market just continued to rally. Quite interesting. Huh? So once again, it can happen. Nothing works perfectly. How we're doing on the PMO buy all indicator. Remains on a buy. I don't have data for today, but I assume it keeps on going. So that's really all I have for today. Short, sweet, and simple. We're in a extended fifth wave. Okay. We have to now acknowledge that fact because we broke well above the ideal wave 5 target zone at the 200% extension for most indexes. So we're going to look higher for smaller 4 and 5 wave. The wave 5 that we're tracking is extended. For the NASDAQ, for the NASDAQ 100, all right, for the semiconductors, as well as for the S&P 500. Now, before I close, I realized I forgot the Dow Jones. How we're looking for the Dow Jones. Let's see what we have. Not this one, not this one. There. Dow Jones still looks good here for this ending diagonal. Okay, it doesn't look so so great. This index, I must say, not as good as the other ones. So we're going to say this is our first warning level. Okay, and we remained at second and third warning level. So this still looks good for this ending diagonal. I wouldn't be surprised if that's what we're seeing. Cracking negative divergences everywhere. So we'll see how this goes, right? If it starts breaking down. And again, this index can already top out versus the other indexes can move continuously higher, okay? S&P 500 did reach very close to 5,026. However, if we are indeed subdividing, as we are now assuming for the NASDAQ 100, these are educated guesses, that's all there is to it. As long as we stay, of course, above critical levels, blue, gray, orange, red, we're good. Okay, we're good. We can allow for higher prices. Would look much better. So I think we have this 3434 and then 345 for the NASDAQ 100. So how would that then look? Then you get this, of course, right? Something like this, 3. It's all, of course, contingent on holding the warning levels, okay? Something like that. Again, I have a more important turn date at the end of February. So this pattern would allow for that to materialize. Let's see how it goes. All right, that's what we're looking for. All contingent on holding these breakouts. Semiconductors, I think, are leading the way. Looks good. I have no adjustments necessary for that. Semiconductors, IWM, I want to see a breakout above today's high, which equals the November high. And then I think we can target into the low to 200s for this wave 3C based on simple symmetry. Dow Jones, definitely lagging. Looks like this ending diagonal continues. NASDAQ, I really want to see this 3, 4, and 5. We don't have to, of course, follow the picture perfect ideal Fibonacci-based impulse pattern. This can morph into a diagonal as well. But so far, this is what we're allowing for. I really want to stress that now that we've moved well above these ideal fifth wave target zones, we must acknowledge that we are dealing with a wave extension. And wave extensions are then assessed using the next Fibonacci impulse pattern from the recent lows. 1, 2, 3, 4, 5. Okay. Same here. 1, 2, 3, 4, 5. All contingent on holding these warning levels. That's all there is to it. That's all there is to it. Okay. So that's all I have for today. I don't really think I should mince more words on it because otherwise I keep repeating myself. We could reach well into the 5100s for the S&P 500. We could reach well into the 18,000s for the NASDAQ 100. And we can easily reach into the 16,500s for the regular NASDAQ. IWM should target, in my humble opinion, on a breakout somewhere around 212 plus or minus 2. And the Dow Jones should still be able to target somewhere around 39,500 for this wave 5 of 5. Okay, that's all I have. Take care, trade safe, and I'll see you all next week.